Have you ever wondered why some traders spend years in the market yet never become consistently profitable? Not months, not one bad year, years. They watch thousands of hours of trading content. They buy courses. They learn strategies. They change brokers. They upgrade computers. They do everything they believe successful traders do, yet somehow they're still losing, still frustrated, still stuck. And one of the biggest reasons is something most traders don't want to hear: a lack of discipline. Because discipline is not exciting. It doesn't sell courses. It doesn't create hype. It doesn't promise fast money. But without it, nothing else works. You can have the best strategy in the world, the best mentor, the best indicators, the best market knowledge, and still lose money. Why? Because knowledge means nothing without execution, and execution requires discipline. That's why many traders know exactly what they're supposed to do, but fail to do it consistently. They know they should wait for confirmation, but they enter early. They know they should follow their risk management rules, but they increase position sizes. They know they should stop trading after reaching their daily loss limit, but they keep going. They know they should follow their trading plan, but emotions convince them otherwise. And that's where profitability starts slipping away. Not because they don't know better, but because they don't do better. Professional traders understand this. Institutional traders understand this. Hedge fund managers understand this. They know that discipline is what separates professionals from gamblers, because discipline allows you to follow a plan when emotions are telling you not to. Discipline allows you to stay patient when opportunities are not there. Discipline allows you to accept losses without doing something stupid afterward. And that's why many traders remain stuck for years. They're searching for a strategy problem when they actually have a discipline problem. The market rewards disciplined behavior and punishes emotional behavior every single day. That's why two traders can have the exact same strategy and one becomes profitable while the other continues losing. The profitable trader follows rules. The losing trader follows feelings. And feelings are dangerous in trading because feelings change. One day you're confident, the next day you're fearful, the next day you're greedy, the next day you're frustrated. But rules don't change, and that's why successful traders trust their rules more than their emotions, because they understand something most traders never learn. The path to profitability isn't built on motivation, it's built on discipline. The second reason most traders never become profitable is emotional trading. This is where many trading accounts begin to fall apart. Not because the trader lacks knowledge, not because the strategy stopped working, but because emotions slowly take control of decision-making. And once emotions take control, logic starts disappearing. Every trader has experienced this. You enter a trade. The setup looks perfect. Everything matches your plan. But then the market starts moving against you. Suddenly, your emotions wake up. Fear appears. Doubt appears. Anxiety appears. And now you're no longer following your strategy. You're reacting to your feelings. That's what emotional trading looks like. It's making decisions based on how you feel instead of what your plan says. And the dangerous thing is, most traders don't even realize they're doing it.
Fear makes traders close winning trades too early. They see a little profit, they panic, and they exit, not because their target was reached, but because they're afraid of losing what they already have. Then greed enters. The market moves in their favor. Their target is reached, but they want more. They ignore the plan, they hold the trade longer, and suddenly the market reverses. A winning trade becomes a losing trade, not because of the strategy, but because of greed. Then there's hope, one of the most expensive emotions in trading. Hope convinces traders to hold losing positions. Hope convinces traders to ignore stop losses. Hope convinces traders that the market will come back. Sometimes it does. Most of the time it doesn't. And while they're hoping, their account continues shrinking. Professional traders understand something very important. The market doesn't reward emotions. The market rewards discipline. That's why hedge fund managers spend years learning how to control themselves. A hedge fund manager isn't successful because they never feel fear. They're successful because fear doesn't control their decisions. They still feel emotions, they simply don't obey them. And that's a huge difference, because many losing traders treat emotions like instructions. Professionals treat emotions like information. When fear appears, they don't panic. When greed appears, they don't chase. When frustration appears, they don't revenge trade. They remain focused on the process. And that's why emotional trading is so dangerous. It turns good strategies into bad results. It turns disciplined traders into impulsive traders, and it destroys consistency. Because consistency is impossible when your emotions make your decisions. One day you're patient, the next day you're impulsive. One day you're disciplined, the next day you're emotional. And your results become just as inconsistent as your behavior. That's why many traders spend years searching for a better strategy when the real problem is emotional control. Because in trading, your biggest battle is rarely against the market, it's against yourself.
The third reason most traders never become profitable is unrealistic expectations. This problem starts before many traders even place their first trade, because they enter the market with expectations that have nothing to do with reality. They see screenshots of huge profits. They see luxury cars. They see expensive watches. They see traders claiming to turn small accounts into fortunes overnight. And they start believing trading is a shortcut to wealth. So they arrive in the market expecting fast results, fast money, fast success, fast freedom. But the market doesn't work that way. And that's where disappointment begins. Because when reality fails to match expectations, emotions start taking over. Think about it. If someone believes they should double their account every month, they're going to take bigger risks. They're going to force more trades. They're going to become impatient. And eventually, they're going to make mistakes. Not because they're bad traders, but because their expectations are unrealistic. Professional traders don't think this way. Institutional traders don't think this way. Hedge fund managers definitely don't think this way. They understand that consistency is more important than speed. They know that wealth is usually built slowly, trade by trade, month by month, year by year. But many retail traders don't want slow progress. They want immediate results, and that's exactly what keeps them stuck. Because unrealistic expectations create unnecessary pressure. Every trade suddenly feels important. Every loss feels catastrophic.
Every setback feels like failure. And under that pressure, discipline starts breaking down. That's when traders begin forcing opportunities, taking setups they shouldn't take, increasing risk when they shouldn't, ignoring rules they should follow, all because they expected success to happen faster than it realistically could. And the market punishes that mindset, because the market rewards patience, not desperation. The truth is, many traders quit right before they could have become successful, not because they lacked potential, but because their expectations convinced them they were failing. They expected 6 months. The reality required 3 years. They expected instant consistency. The reality required experience. They expected quick profits. The reality required patience. That's why professional traders think differently. They focus on improvement, not perfection. They focus on process, not immediate results. They understand that becoming profitable is a journey, not an event. And that's one of the biggest mindset shifts a trader can make. Because the moment you stop expecting trading to make you rich quickly, you start making better decisions. You become calmer, more patient, more disciplined. And ironically, that's often when profitability finally starts getting closer.
The fourth reason most traders never become profitable is poor risk management. This is one of the most dangerous mistakes a trader can make, because a bad strategy might lose you a trade, but poor risk management can lose you an entire account. And unfortunately, many traders don't realize this until it's too late. They spend months searching for better entries, better indicators, better strategies, but almost no time learning how to protect their money. And that's backwards, because in trading, protecting capital comes before making profits. Think about professional hedge fund managers. Before they think about how much they can make, they think about how much they can lose, because they understand something many retail traders ignore. If you protect your capital, you can always trade tomorrow. But if you destroy your capital, tomorrow doesn't matter. Yet many traders approach risk completely differently. They risk too much on a single trade. They increase position sizes after losses. They move stop losses further away. They ignore their risk limits. And all because they're focused on making money instead of protecting money. That's why poor risk management destroys so many traders, because it turns small mistakes into massive losses. A disciplined trader might lose 3 trades and still be completely fine. Why? Because their risk is controlled, their account remains healthy, their confidence remains intact, and they can continue executing their plan. But a trader with poor risk management can lose 1 trade and suddenly weeks or months of progress disappear, not because the trade was bad, but because the risk was reckless. That's the difference. Professional traders know that losses are inevitable. That's why they prepare for them. Losing traders often believe losses won't happen to them, and that's why they're shocked when they do. A hedge fund manager never enters a position believing it's guaranteed to work. They understand probabilities. They understand uncertainty. They understand that any trade can fail. And because they understand this, they respect risk every single time. No exceptions. That's why risk management is not just a trading skill, it's a survival skill. Without it, even a profitable strategy can fail. Without it, one emotional decision can destroy months of hard work. Without it, consistency becomes almost impossible.
Because the goal in trading is not to avoid losses. The goal is to make sure losses remain small enough that they never threaten your future. That's how professionals think. They're not trying to win every trade. They're trying to stay in the game long enough for their edge to work. And that's exactly what poor risk management prevents. Because when risk is out of control, everything else eventually falls apart. No matter how good the strategy is, no matter how smart the trader is, no matter how much experience they have. Because in trading, the traders who survive are usually not the ones who make the most money quickly. They're the ones who protect their money the best.
The fifth reason most traders never become profitable is because they don't think like professionals. This is something many traders never realize. They want professional results, but they continue thinking like amateurs, and that creates a huge problem, because your results will eventually reflect your mindset. Think about the average losing trader. They're constantly focused on profits. They wake up asking, how much money can I make today? How many trades can I take today? Can I double my account this month? Everything revolves around money. Everything revolves around quick results. But professional traders think completely differently. A hedge fund manager doesn't wake up asking, how can I make the most money today? They ask, how can I execute my process correctly today? That's a completely different mindset. One focuses on outcomes, the other focuses on execution. And over time, that difference becomes enormous. Because professionals understand something most losing traders don't. You cannot control profits, but you can control your behavior. You can control your discipline. You can control your risk. You can control whether you follow your plan. And that's exactly where professionals focus their attention. They don't obsess over every dollar gained or lost. They obsess over making good decisions, because they know that good decisions repeated over time eventually create good results. But many retail traders never think this way. They're obsessed with being right. Professionals are obsessed with managing risk. They're obsessed with protecting capital. They're obsessed with consistency, because consistency is what keeps them in business. Another major difference is how professionals view losses. Losing traders often see a loss as failure, something personal, something emotional, something they must immediately recover. But professional traders don't think that way. Institutional traders understand that losses are simply part of the business, just like expenses are part of running a company. A restaurant has expenses, a hedge fund has losing trades. That's reality. And because professionals accept this reality, they don't panic when losses occur. They don't revenge trade. They don't abandon their systems. They simply continue following their process, and that's exactly why they survive. Another thing professionals understand is patience. Many retail traders feel the need to trade constantly. They believe activity equals productivity. But hedge fund managers can wait days, sometimes weeks, for the right opportunity, because they understand something powerful. The market will always provide another opportunity. There is no need to force one. That's why professional traders are often less emotional, less reactive, less impulsive, not because they're smarter, but because they've learned to think differently. They think in probabilities. They think in statistics. They think in long-term outcomes, while many losing traders only think about the next trade, the next day, the next profit. And that's why most traders never become profitable. They're trying to achieve professional results with an amateur mindset. But the moment you start thinking like a professional, everything begins to change. You stop chasing, you stop forcing, you stop gambling, and you start focusing on the things that truly matter: discipline,
patience, risk management, consistency, because those are the qualities that separate profitable traders from the crowd. And until a trader learns to think like a professional, consistent profitability will always remain difficult to achieve.
And perhaps the biggest reason most traders never become profitable is that they don't understand the difference between retail traders and hedge fund traders, because many retail traders are trying to win the game without understanding how professionals actually play it. At first glance, both groups seem to be doing the same thing. They buy, they sell, they analyze charts, they manage positions. But beneath the surface, their mindset is completely different, and that difference changes everything. Most retail traders enter the market thinking about profits. How much can I make? How fast can I grow my account? How quickly can I become financially free? Those are the questions constantly running through their minds. But hedge fund traders rarely think that way. Their first thought is usually risk. How much can I lose? What happens if I'm wrong? How can I protect capital? Because professionals understand something that most losing traders ignore. Making money is important, but keeping money is more important. That's why hedge funds survive for decades, while many retail traders struggle to survive for a few years. Retail traders often become emotionally attached to trades. They want to be right. They defend losing positions. They move stop losses. They refuse to accept mistakes. But hedge fund traders have no emotional attachment. If a trade is wrong, it's wrong. They exit. They move on. No drama, no revenge, no ego, because protecting capital matters more than protecting pride. Another major difference is patience. Retail traders often feel pressure to trade every day, every hour, sometimes every minute. They believe more trades create more opportunities, but hedge fund traders understand that more trades often create more mistakes. That's why professionals can sit and wait, and wait, and wait for the right opportunity, because they know that patience is often more profitable than action. Then there's the way they measure success. Retail traders measure success by profits. A good day means making money. A bad day means losing money. But professionals measure success differently. They measure success by execution. Did I follow my rules? Did I manage risk correctly? Did I execute my process properly? Because they know something powerful. Profits are a byproduct of good decisions, not the goal itself. And that's why many hedge fund traders remain calm during losses. They understand probabilities. They know that even great trades can lose, and even poor trades can win. That's why they don't judge themselves based on one trade. They judge themselves based on thousands of decisions over time. And that's the mindset most retail traders never develop. They're obsessed with short-term results. Professionals are obsessed with long-term consistency. Retail traders chase excitement. Professionals chase discipline. Retail traders look for shortcuts. Professionals build processes. Retail traders want fast money. Professionals want sustainable success. And that's the lesson. The reason most traders never become profitable isn't because they're incapable. It's because they're trying to win a professional game with an amateur mindset. But the moment you stop thinking like a retail trader and start thinking like a professional, everything begins to change. You become more patient, more disciplined, more focused on risk, more focused on process, and less focused on quick profits. Because in the end, the traders who survive the longest are usually not the smartest, they're not the luckiest, they're the ones who learn to think differently, the ones who learn to think like professionals.
And that's often the moment profitability finally begins to become possible.
So remember this. Most traders never fail because they lack information. They fail because they lack discipline. They fail because they let emotions control decisions. They fail because they expect success too quickly. They fail because they ignore risk. They fail because they think like amateurs instead of professionals. And they fail because they focus on profits before focusing on process. The market doesn't reward the trader who wants money the most. The market rewards the trader who can remain disciplined the longest. That's why profitable trading is not about finding the perfect strategy. It's about becoming the kind of person who can execute a strategy consistently, day after day, week after week, month after month, even when it's difficult, even when emotions are high, even when losses occur. Because losses are part of trading, mistakes are part of trading, difficult periods are part of trading, but discipline is what allows you to survive them, and survival is what gives you the opportunity to succeed. So stop searching for shortcuts. Stop looking for magic indicators. Stop believing the next strategy will solve all your problems. Instead, focus on improving yourself. Become more patient. Become more disciplined. Become more professional. Learn to think long-term. Learn to respect risk. Learn to trust the process. Because the traders who eventually become profitable are usually not the fastest learners. They're the ones who refuse to quit, the ones who continue improving, the ones who stay disciplined long enough for their hard work to pay off. And if you can do that, if you can focus on the process instead of the outcome, then one day you'll look back and realize that profitability was never about finding something new. It was about becoming someone better. And that is the difference between the trader who keeps struggling and the trader who finally succeeds. Thanks for watching, and I'll see you in the next video.